Hey everyone, hope you're having a great day today. So two things we're going to talk about today. We're going to look at the charts, then we're going to talk about Bitcoin volume declines, along with a growing illegal crackdown in the crypto space that we're seeing, or it's being reported on. So first, let's look at the charts here. So Bitcoin is obviously bouncing a little bit back after dropping. It had a bad drop, but it had a good drop. So from the highs, we dropped almost 7.78%. We're trading now at 45,000. I think there's still a probability that we may go down even further. I think we may come down to the 42,000 mark. We're seeing the 50-day move above the 200-day moving average. And I think we may, in the next couple of days to a week or so, come back and touch that 50-day line as it's increasing up. Once it gets closer to the 42,000, I think we may come down, bounce off of it, and then we may continue on our path going forward and going up. But right now, it's kind of in the air as far as which way we're going to go. But I think there's a possibility we may go down. Looking at the RSI and the 4-hour chart, or actually on the daily chart, we're at 60 right now. So we obviously have room to go down. On the 4-hour chart, we're pretty low right now. So we could go down a little bit more, like I said. But we'll have to keep an eye on it in the next couple of days. On the 1-hour chart, we obviously went down to the 30 mark, bounced off of that. So we'll keep an eye on what's going on with Bitcoin in the next couple of days, whether or not we go back down to the 42,000 mark. Dogecoin obviously also dropped back down. It went all the way up to 35 roughly, and then it came back down to a low of 27 cents. So that was a 20% correction that we had a little bit here in the last day or two. So we're seeing the RSI and the 4-hour chart being right now at 42. So we can go either way. We could go down a little bit more or up. Right now on the 4-hour chart, we are trending down. So we'll keep an eye on it. And Doge is at 29 cents right now. I mean, we're still way up from where we were, but we've obviously come back down. And everything's come back down from the market. I mean, the market's come back down, crypto market, in the last 24, 48 hours. Stellar had a pullback as well. Stellar pulled back all the way down from 40 cents down to 32 cents, another 20% correction there. So we may, looking at this, we may have maybe had a good correction here on the altcoins. So we may pull back up after this. Litecoin is down as well. It is down from its high of 188.96. It went all the way down to 162.82. That was a 13.8% correction that we've seen in the last couple of days. RSI is down as well, so that's good on the 4-hour chart. So we may continue to bounce back up from here. And then it's looking like we're bouncing off the 200-day moving average here on Litecoin. So that's a good sign there. We had a nice wick here and obviously closed above it. So that's a positive sign in my book. Cardano has also had a pullback from its high. We were at roughly $2.24, and then we've pulled back down all the way to 186, which was almost a 17% correction, and we're pulling back up. So there's another good sign. So I think Cardano, with the RSI being here, we may go either way, but I think we're going to go back up in the next day or so, and then possibly come back down, with Bitcoin obviously also tracking down maybe to the 42,000 mark. Things to keep an eye on. What is this? Ethereum on the 4-hour chart. We're seeing that there is support right around, what is that mark? 2,900, almost $3,000 the support mark. So, and the resistance is at around $3,300 or so in change. So we'll keep an eye on it. RSI is obviously down lower on the 4-hour chart. On the day chart, it has obviously come down, giving us a little bit more room to run if we wanted to. And then finally, the mining stocks got beat up yesterday. So Hive closed at 269 yesterday. It was down quite a bit from its high this week. It was at 342. And it came back obviously down all the way down to 260. So that was a 21% correction there. I think it's a little overcorrected there possibly on the 4-hour chart. We're looking down to 41 mark on the RSI. Marathon Same thing, huge correction, looks like from a high of 37.72 all the way down to 30. That was a 20% correction on that stock as well. So we're seeing a lot of almost 20% corrections in the market. Bitfarms, I'm going to guess is going to be the same thing, close to 20% from the high of 746 down to, oh wow, Bitfarms corrected really heavily, 28% down. Obviously, they reported earnings on Monday. We did a earnings report on that yesterday, and we've noticed that, or I noticed that they made a mistake on the reporting. It should have been negative 10 cents EPS instead of negative 2 cents that they reported. So we'll have to keep an eye on it. Moving on, Coinbase. Coinbase has also had a huge correction. It is at, what is it, 250 yesterday that it closed. It hit a high of 293, and then it came back all the way down to 246. So that was a 16% correction. So quite a big corrections on all of these. All right, let's get into the stories here. So the first story is on Bitcoin buyers could take profits as volume decline. While many of the technical and on-chain indicators confirm, let me zoom this in for you guys, confirm the rebound strength, it may still be early to say we are out of the woods. Nathan Cox, Chief Investment Officer at digital asset management firm 2 Prime, wrote Tuesday in an email to investors. Traders are also monitoring the ongoing regulatory crackdown in several nations, which could dampen bullish sentiment. On Tuesday, the Shenzhen branch of People's Bank of China plans to promptly clean up and rectify 11 companies for providing illicit crypto trading activities, state-owned Shanghai Securities Journal reported. In Spain, the National Securities Market Commission issued a warning notice for 12 companies, including crypto exchanges Huobi and Bybit, for providing investment services without being registered with authorities. CoinDesk Eliza Grixky reported. And in South Korea, a crypto exchange subsidiary of Japanese tech giant Line is reportedly limiting its services next month, according to a report by Yonhap News. For now, the technical chart suggests Bitcoin remains in a breakout mode with support around 42,000, which is what we've been saying here, what I've been saying. The loss of short-term momentum could trigger a brief period of profit taking. And we're obviously seeing that with a lot of the coins and also the mining stocks, being down 20% plus. All right, next news we'll get into is part of that legal crackdown. So massive wake-up call. Let's see here. Massive wake-up call faces growing legal crackdown. So federal regulators are pursuing cryptocurrency startups in court and striking a growing number of legal settlements for rule violations, triggering complaints from the industry and sympathetic lawmakers who say it threatens a growing sector of the economy. Over the past month alone, the Securities and Exchange Commission, the Commodity Futures Trading Commission, and the Treasury Department announced more than $120 million in penalties aimed at digital currency exchanges and other services providers that officials said weren't complying with federal market regulations and anti-money laundering requirements. Several states also escalated their own crypto enforcement crackdowns this summer. I mean, that is a huge amount of money, $120 million in penalties. I know that the exchanges are making a lot of money, but still, $120 million is a lot for, I guess, I don't know, just to penalize somebody for not registering, and that seems a little excessive to me. The CFTC Commissioner Dan Berkovitz said in an interview that some cryptocurrency companies believe the rules don't apply to them. He said the regulators are now vigorously pursuing legal action to protect customers, ensure market integrity, and prevent systematic risk. SEC Chair Gary Gensler also warned this month that crypto was rife with fraud, scams, and abuse, and that his agency was prepared to use its authorities as far as they go to police the market. So we're seeing, obviously, everybody coming out of the woodwork trying to protect consumers, right, from being, I guess, scammed and things like that. I think it's just more on the part of we should be educating consumers and not stifling technology from going forward. A policy posture of ignoring Washington or showing disdain for Washington will ultimately be a failed strategy. And this was from Charlie Cooper, a former CFTC Chief Operating Officer, excuse me, now with the software blockchain technology firm R3, said. So that's true. You do have to kind of play within the rules. You can't go around them. Regulators in recent weeks have made it clear there's zeroing in on crypto exchanges and DeFi platforms. Two high-profile cases in August, a 100 million CFTC and Treasury settlement with crypto derivatives services BitMEX, and a 10 million SEC settlement with digital assets exchange Poloniex revolved around charges that the companies were operating on licensed trading platforms. So a lot of money for just not being registered. Some of the targeted crypto companies are trying to signal that they now take the rules more seriously. BitMEX CEO Alexander Hoopner said in a blog post after his exchange settlement that crypto is becoming more responsible. If you look at another cryptocurrency exchange like Gemini has always played within the rules, and Bound's always gotten their licenses. So always be mindful of where you're investing in. Obviously, the ones that are complying with the rules have a better chance of succeeding in the long run and having a better chance of not getting scammed or hacked or things like that. So just be mindful of that. We are committed to becoming a regulated exchange and are looking to set the benchmarks in this new era of crypto, said George Godsell, spokesperson for BitMEX operator 100X. The federal case came as 5 states, including New Jersey, Texas, and Kentucky, took action against the startup BlockFi for offering interest-earning accounts. The regulators say could be unregistered securities products. I don't know how they're going to be unregistered securities products. You're basically just depositing your money there, and they're loaning your coins out to somebody else, and you're making interest rate on that. So interesting to see how they're going to follow that up. BlockFi spokesperson Madeline McHugh said the company believes its products and services are lawful and appropriate for crypto market participants, and that we remain steadfast in our commitment to protect consumer rights to earn interest on their crypto assets. I don't use BlockFi. I know other people that do use BlockFi for it, so be mindful of that. These are new services. Don't put more into it than you're willing to lose, basically. Some lawmakers are beginning to push back on the enforcement crackdown and warn there is an urgent need for Congress to draft new rules for industry business model. Representative Patrick McHenry of North Carolina, top Republican on the House Financial Services Committee, said regulation through enforcement hinders innovation. And that's true. Too much regulation will hinder, obviously, innovation. Representative Don Bayer has introduced legislation that would require the CFTC and SEC to issue new cryptocurrency rules. His bill would give the CFTC, which today regulates derivatives linked to things like oil and also fiat currencies, authority over digital assets. It would give the SEC, the U.S. stock market regulator, authority over digital asset securities. So they're working on legislation, hopefully, to kind of get this all fixed up. We saw this with the infrastructure bill, how that was just basically blocked. So hopefully they're going to get their act together and do something in the House, I think. The lack of legal clarity has hindered investment and innovation, and Congress should provide clear rules of the road for the growing market, Bayer said in a statement. Excuse me. So I agree with that. Obviously, the more clear the regulations are for the crypto space, the better off we're going to be in the long run. We're still early on. Think of it like the internet in the early 1990s. We're still very early on, where it was the Wild West. People wanted to regulate the websites that you had to get licenses for them in order to be able to post online. It was just crazy. And this is kind of the part that we're going through right now with crypto, where all of this is happening really, really fast. And we need to kind of slow down a little bit, and I think just regulate the space a little bit better. So that's it. That's all I got for you guys. Hope you guys liked it. Obviously, be mindful of where you're investing your money, as always. And just be careful out there. There's a lot of scams out there going on. So invest with reputable companies. Do your own research. And have a great day. I'll see you guys in the next one.